All right, guys, welcome to tonight's market chart setup. This is what I want to do, guys. I'm not going to be going to some crazy advanced training with this. What this training is for is simply for you guys to watch this setup and see for yourself. Rory, happy birthday. Happy birthday, man. If this setup works, if this is something you want to follow. Okay, so with this setup, we use the daily. We use the 4 hour, the 1 hour, and the 15-minute. We use the daily for direction, the 4 hour for momentum, the 1 hour for stop loss and entry, or stop loss and take profit, and we have the 15-minute for our entry. And I'm going to show you how I use this system. Shout out to my mentor, Robert Ritchie. Brother, if you see this, if you come across it, I want to let you know, thank you for the knowledge. Everybody tell Rob, thank you, because of him that you guys are getting this knowledge as well. He's blessed me with his blessing to be able to show you guys this. So let's go ahead and get this rolling. So with this method, you will be using Heikin-Ashi candles, okay? Here's regular candles. This method, here's the reason why we use Heikin-Ashi. So right here, you can see that the market is in a clear uptrend. Switch direction, went back up, switch direction, is currently going back up. Now let's focus really quick. Let's focus on this area right here. Okay, let's focus on this right here. I want you to see the difference between Heikin-Ashi and Japanese candles. These are Japanese candles. For people who are used to seeing them, we can see our low, we can see our high. Okay, I have a recent low and a recent high. You don't want to focus too much on the past for this system and method that I'm showing you. So let's go ahead and, because what we do first off, we identify our most recent highs and our most recent lows on the daily, the 4 hour, the 1 hour, and the 15 minutes. So I'm going to mark my obvious low. For daily, we use a solid burgundy line. There's my low. There's my high. Okay, we could argue that this is the new low. Okay, and it's most preference of how you interpret this strategy. For a tighter area, we would go here. Okay, me personally, I'm going to go right here just because I don't know what the market is going to do. So let's see. We now have our high and our low. Let's see what the difference between Japanese and Heikin-Ashi is. Okay, you can see it went bearish, bullish, bearish, bullish, bullish, bearish, bullish, bullish, bearish, bullish. Okay, now watch this. Can you see the much more clear movement? The much more clear movement. Okay, much more clear movement. You can see when I switch back to regular Japanese candles, okay, if I go to the wick like they tell you to, look at the range difference. There's regular, there's Heikin-Ashi. Look at the range difference. I mean, it shot down and pulled right back. Shot up, pulled back. Shot up. It's touching these areas. These are exhaustion areas, okay? Exhaustion areas. These are not the true area of the market, in my opinion. So what we're going to do is we're going to pull, we're going to get a little bit tighter on this, okay? We go to the top and the bottoms of the body. Now watch the difference. See that? See how the range is a little bit different? See? We can't tell what price really went with Japanese candles in this method, but watch this. We can tell exactly where the market went with Heikin-Ashi, okay? So let's move on. So we have our high and our low identified on the daily. People may argue that it's here, which is very well could be. However, I like this area. This to me is the most recent. This was the biggest change in direction, and this is where it stopped. And this is where it reversed. This is where it changed direction again. So this is, until this low is broke, I'm not going to go, okay? So we've identified our daily. Now let's one advice is, okay, zoom, pull price up so we can get a more accurate. You see I'm off a little bit right there. We want to be as accurate as possible when we're doing our daily and our highs and lows on all the time frames. Okay. Let's go to the 4 hour, which I use their horizontal line. I use a solid aqua blue. You can tell our obvious high is right there. Our obvious low is here. Okay. We'll go to our 1 hour, which I use green, solid green. Okay. Our obvious most recent high there. Oh, let's change that back to blue. That again. And our most recent low is right there. Now we're going to go to our 15-minute. Okay, on this smaller time frame, you can see, okay, that we had an obvious bearish run. This is the most obvious change in direction. So this is where I do my setups on Mondays usually. And here's the reason why. Because the market stopped here. Okay, our high is going to be where the market stopped. When the market opens, we can identify our low, which for the 15-minute, I use yellow. Okay, I can identify the low very easily. Go high. Okay, but here's my problem. I mean, you want the most obvious change in direction to be your high and low, the most recent. If I put my high here, here's my problem with this. I don't know where the market's going to go. Okay, that could get blown out the second the market opens. I don't know. This is one reason why I do my setups for this system on Mondays or Sunday nights, okay? Because the market has had its chance to do its crazy bipolarness and do whatever it wants to do. The other problem is I want a pattern, okay? But if we zoom out, when's the last time this market was here? Clear back in February on a 15-minute chart? I mean, almost a month ago. Okay, I don't know. So in my argument, I would put this up here just because I have more of a range to trade. Okay, I have more movement in between these two areas. Right here, I'm very limited. So for the sake of this, for the sake of what I'm doing, these are not trade signals, guys. This is just, I'm going to mark this up. I'm going to mark where the market's going to open today. And then next, at the end of the week, I'm going to come back and we're going to go over this setup again and see if the market respected it. So you can decide for yourself if this is something or a style that you would like to do. Okay, in my opinion, this style is much more accurate. What's so great about this style is that when you're wrong, you can go back and see why you were wrong. The problem with triangles, which I love, by the way, one of my favorite trading patterns, and bullish flags and bearish flags, and ascending, descending triangles, diamonds, is that it's hard to tell where you went wrong because you just have a pattern. You don't have accurate highs and lows and 38 twos. So let's go ahead and mark these up. Now what we want to do is mark up our 38 twos. We use 38 twos, and this is the reason why. I was really confused on why my mentor used 38 twos. This is what he told me. Everyone else uses 50%, okay, as a reversal point. The problem is by the time it's taken back half the previous run, you've already given up half the trade. So if we can get in a little bit sooner than 50%, that's just that much extra that we have to confirm not only our direction, our trade, our momentum, but pips. We're going to catch just a little bit more pips. He calls it smart money. So this is an obvious downtrend. So on our fibs, we want to draw from our high to our low on a downtrend. An uptrend would be from the low to the high. something I want to show you in your settings, okay? This is what we use. The first 7 boxes are checked. You reverse your fib because we're going off past market history. Past market history. Okay, we want to use the same color line dotted as the time frame, which is 15. Okay, hit the settings. You can see 38.2 says 70960. Coordinates 70960. We want accuracy. We don't want to leave money on the table, y'all. Now we're going to go to our 1 hour, which is green. Okay, obvious bearish trend, which is from our bearish trend, swing high, swing low, right at the body of the candles. We want our dotted line to be the same color as our time frame, which is green. Click it, hit settings. You can see that it's 7011 or 71001. So I'm going to put 001. Delete your fib. Okay. We do not put fibs on the 4 hours. You'll see later on why. Guys, this is just the basic overview so you can see what's to come in the future. Yeah. So let's go to the daily. Okay. I'm going to go swing low to swing high. Okay. Because that was the momentum of the range. Out. On our dotted line, the same color as the time frame, burgundy. Hit settings, 71134. Okay, erase our fib. Now, what we're looking for is patterns from the 38.2. What happened when the market broke through the 38.2? Okay, but first want to identify what we're currently looking for. 3 above, 3 below confirms direction or your bias. So you can see in the past on the daily 38.2, 1, 2, 3, market fell. 1, 2, 3, market went up. It came back down, but it did not close. It retested, okay, but closed above. Then we had 1, 2, 3. Market came down, 1, 2, 3, fell down. It may not look like a lot, okay? But when it closed below, because of the previous, the previous 3 below, 1, 2, 3, when it closed below, it dropped. Okay, and it dropped roughly 47 pips right there. Okay, the previous 3 above, confirmed bias. When it closed above, to the wick went roughly 66. Okay, so like I said, I'm not going to get into actual training of this method. I'm just going to get into the okay. So if we go to the 15-minute, I'm actually going to be using this chart. I've been doing this on a demo account, okay, guys? Complete transparency. While I've been learning this and studying it, I've been doing it on a demo account but I've been winning a lot. Okay, I wake up in the morning, scalp some pips, and I'm out. You can do it on the daily. It applies to any time frame. Okay, so this is what I want you guys to do, okay? This is what I'm going to do, and you can do this too if you're setting up your chart. We're going to go to where the market opens today, which is right here. Okay, you can see that it's marked itself March 3rd, 2019. This week, this chart is going to run its course, okay? And we're going to see what happens at the end of the week with this training, okay, or with this webinar. We're going to see if this respected just this simple part, first simple part, highs and lows and 38.2s of this method and what happens. Okay, you guys might have some questions right now. I'm not going to answer them just because I want you guys to see. but you can see I've clearly marked today's date, March 3rd, 2019. Okay. We're going to come back. You can see though, 3 above, 3 below, right? Okay. It's been a while since this market's come here. But you can see 3 below, retested, fell. Okay. 3 above, went up, retested, raised. Right now we're currently in this area. So what I'm looking for is for this market to come back up to this area. Like I said, some people will pull it tighter and put their high there, but I want more movement. Okay. So guys, I know it probably doesn't make sense to you right now. It didn't to me for a long time, but we've clearly marked where the market opened, so we can come back next week and we can see even on any time frame. You can see the market we opened here, 4 hour, we see the market opens. So we're going to see what happens, and then we will come back over this and see if we were wrong about something, to see if I was wrong about something, not we, but I, if I was wrong or if I was right. And then when we see the outcome, then we can start going more into detail of how to do this, what to look for, your triggers and things like that. But my main purpose for this one was to just set up our highs and lows, our 38.2s, and mark where the market opens so we can see. Okay. Thanks for attending, guys. I will see you sometime next week.